That will be fantastic. Started really, really soon. So come on in, let us know where you're from in the chat, and let us know what you're looking forward to learning about today. So we've got Harwin from the USA. Welcome, Harwin. That's good to see you. We've got lots of people coming through. Super excited. I'm over here in the UK.
We need a whole team of tech over here. You can see me, yes. All right, we're gonna bring it. Team, I want to start as I'm starting and as I'm getting streamed right now on other places. First of all, we're here yesterday. Let me see in the chat. Yes, Caroline, Trim, and Yolanda. All right. So, Fred, welcome, welcome, welcome. Oh my gosh, I guess we're doing it. I guess we're live. I'm thinking we're also live on Facebook and YouTube and LinkedIn. For those of you who are seeing me anywhere else, just come join me on Zoom. Oh my goodness. Super, super, super exciting. We are here. Roland is her first time. Mary was here yesterday. All right, so I want to know some of your takeaways from yesterday. Yesterday, we went deep on who you are. Who are you? Why are you here? And also, do you truly believe that you deserve to be wealthy? Do you truly believe that you deserve to be wealthy? Because if you don't, no matter what I teach you, no matter what Tony Robbins teaches you, no matter what Warren Buffett says, no matter what who says, if deep down you think that you're either undeserving or it's not good for you or feel guilty about becoming super ultra abundantly wealthy, guess what? You're going to make sure you're not going to become wealthy. So that is what we worked on yesterday. We helped you become the right person in the right place at the right time. I believe this is the right time. I believe this is, if you've never invested before, if you hadn't had your business before, if you've started but you've never been serious about it, if you've been serious about it but you haven't really gained any success, if you've gained success but it hasn't been to the level that you wanted, this is the time. We're almost in a recession. We may or may not be at a recession. We may have a recession or not, but the fact that people are scared. What does Warren Buffett say? Warren Buffett says, be greedy when they are fearful. And that is why this is the time, the best time to get started. But you need to be the right person in the right place. You are in the right place because I'm going to spill the beans. I am not going to be gatekeeping. All these awards that you see behind me is not to impress you. It is to show you that somebody like me, who is an immigrant, who came to America because I thought I was going to be something and I got fired and my boyfriend dumped me and I was like sleeping on couches of friends and was a humiliation to my family. Somebody like me is now generating $500,000 to $1 million per month. I have a portfolio that, depending on the day, fluctuates between $5 million to $7 million. I couldn't even imagine what $7 million looks like. What does a person who have $7 million look like? I had never seen a millionaire before. Seeing is believing. So once I finally saw somebody who had made $1 million, boom, I was like, oh, that's a normal person. He doesn't look weird. He doesn't have, horns. Kind of sun, cool, kind of nice. And that is when it kind of clicked for me that, oh wow, random people, normal people can become millionaires. But as long as I had any ounce of doubt that becoming a millionaire is a good thing, I made sure to ruin all the paths. It wasn't until I actually believed that by becoming wealthy, I can help create abundance for other people. I can make the world a better place. I can be a force for change. I can help my parents retire. I can build generational wealth for my children. I can help other people. I can give to charity. I can create abundance for myself so that I can give from a place of abundance. You cannot give if your cup is empty. How many guys get it that if your cup is empty, you cannot give? How many guys are getting it? Say, I'm getting it in the comments today. Our comments are working, so that's awesome. That is cool. Yes, me. So good, so good, so good. What is my lipstick is the question that caught my eyes. You know what? I'm here to serve. You want to know my lipstick? I'll tell you. It's e.l.f. I think I got it from TJ Maxx. Guys, I know I'm a millionaire. I still love going to TJ Maxx. Although I haven't been going for, I guess, 2 years. I don't know where I got it from. But e.l.f. Oh, you want to know it's e.l.f. Ravishing Rose. Yeah, it's very, very sensational. All right, team. So give me your takeaways from yesterday. What were some of your limiting beliefs about money yesterday? Write it down in the comments. What were some of your limiting beliefs? Maybe it was that wealthy people are greedy, wealthy people will become sad or unfulfilled. We had so many good ones yesterday. So type in the comments, what were some of your limiting beliefs about money, about becoming wealthy, and about millionaires and rich people? Oh, Lisa says you can't be rich and spiritual. Oh my gosh, Lisa, this is something that I go actually really deep during the Build More Wealth Challenge next week, but I have to say this because this is so crazy that people think that money and spirituality are two different things. Now, I'm spiritual, but I'm not religious. I was born Jewish. I went to Muslim school and I'm married to a Christian. So I'm like all over the place. I've read them all. And now I'm like connected to the universe or whatever. All right. So we're not going to get there. But through my research and through my journey and learning about money, I found out that not only money is energy, which we're going to actually prove that money is energy next week during the Build More Wealth Live, but it actually is spiritual. In fact, in the Bible, in Quran, in the Old Testament and New Testament, it's all about gold. Gold, 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 gold. Now, one of my coaches, in fact, teaches about the principles of money from a Bible's perspective. He basically teaches King Solomon's wealth principles. I'm not going to give it away, but he may or may not be our guest for the Build More Wealth Live. I didn't say it, you didn't hear it, but just take it from me for now that money, in fact, is spiritual. And it's very, very empowering, especially for people who have been indoctrined by what some religious authorities have been misinterpreting the books, the Bible. So let's see some of your other, it's too difficult. Is there another Kiana here in the chat box, but with a different spelling? It's too difficult. Making money is too difficult. That's a really good one. What if I told you making money is easy? In fact, being broke is hard. Like being broke is so hard. You have no idea how easy it is to get on the path where you make money and then your money makes more money, and then the money that money makes more money, and it keeps compounding. And before you know it, boom, it's this avalanche of money. Again, it took me 10 years, like this award that you see behind me, this one, oh, my sticker, we'll talk about this later. Don't mind my sticker here on my, this award behind me is when it was awarded to me when I first made $1 million in revenue. It took me 10 years to get there. This award was awarded to me when I made $10 million in revenue in my business. Guess how many years apart these two awards were? 1 year. It took me 10 years to make $1 million. And then once I figured it out, boom, the next year I made 10 million. This is the second year, we're already on to our 15 million. This is revenue generated in our business, by the way. We're going to go deep into business in Build More Wealth Live. This pregame, we're going to focus more on investing and making your money work for you. And then when you're like, oh my gosh, okay, now I know how to invest, how can I make more money? You're going to come, or if you already have a business, if you're already an entrepreneur who's making $10,000 to $100,000 per month, then you got to come to Build More Wealth Live so I can teach you some tweaks you can make to your business to go from 10K or 100K to 500K per month, $1 million per month. And again, if you have had some success with your business, I'm telling you right now, you're not 1,000 steps away from 10xing your business. You're probably like 3 to 4 tweaks away from 10xing your business. And we're going to talk about that in Build More Wealth Live. Now, oh, we have money will change you often for the worse. Of course, Jessica. Of course, Jess, you have that limiting belief. You know why? Because each and every Hollywood movie, series, cartoons, Netflix, Hulu, what have you, is promoting bad guys as being rich. Every superhero movie, every Netflix and chill movie, White freaking Lotus is all about how rich people suddenly got, cheaters, mafia. How many guys, my mind was blown when I started watching White Lotus, because I'm like, what? White Lotus is the worst. Not only it was ruining my relationship, it was ruining my money mindset. And it's not just that, it's kids series, kids movies. Rainbow Rangers is this Netflix series that is about these seven powerful girls, best friends, who unite and do our force for good in the world. And I'm great, I'm going to put my toddler in front of Rainbow Rangers. And guess what? Who's the bad guy in Rainbow Rangers? Preston, the millionaire. Stop brainwashing my child. Each and every billionaire, millionaire that I've had the opportunity to now finally come across have been amazing people. Sure, there are shitty millionaires out there, and so there are shitty broke people out there. But people who earn their money ethically are typically really, really good people. They're philanthropists. They help. They give to charity behind the scenes. You have no idea. But they don't even have to work anymore, but they continue working because they want to serve. Money earned ethically by good people just amplifies that goodness, that abundance. So those were some of the things that we talked about yesterday. Erica says my daughter watches Rainbow Rangers as well. Never thought I know you don't even realize that they're brainwashing you until now that I'm teaching people about money, and I'm very, very cautious about my mindset. I'm very, very strategic about what goes into my brain and what I think, and I always am catching myself about the things that I think, because thoughts become words and words becomes actions and actions become your reality. Whatever your focus goes, energy flows. So I've become very, very, very cautious about what goes in my brain, about like all these, we called it yesterday, we talked about the itty bitty shitty committee is saying with their tiny voices that turn into this megaphone that completely impacts the way that you think, the way that you act, and the way that you live like your life. So ever since I've become cautious, I'm catching it. This is your homework. Pick any movie, any series, anything. Go on media, go on TikTok, go on Instagram, go on YouTube. 90% of the clickbaits and the binge-worthy and the drama, we're actually going to get into that about investing too, is basically programming your brain to stay broke. And this is actually a very good segue to what I wanted to teach you about and talk about today. And that is, this recession thing that everybody has been super fearful about. How many of you have been, kind of dreading the recession? Put an I in the comments if you've been hearing about the recession, if you've been dreading the recession. Put an I in the comments if you've been somewhat stressed about the R word. We're getting I, but some people are like, not at all. I can't tell if you're being sarcastic. I'll admit I've fallen for those Korean and novella dramas every now and then. All right, Jonathan says, I'm hoping for one so I can buy low. All right, I can see Jonathan is tracking with us. Erica says, it seems like everyone that knows what they're talking about is freaking out. That's interesting. Everyone that knows they're talking about is freaking out. I doubt anybody that actually really knows. If they're actually Nostradamus, they wouldn't be freaking out. Because if you really know, then why are you freaking out? And if you don't know, then you don't know. So again, stop freaking out. Right? Nobody has a crystal ball. Nobody knows. Are you guys getting it? Like, nobody knows. The guys who are freaking out, do you know why they're freaking out on TV? Because it makes good TV. It's a good clickbait. I know when the markets are volatile, I don't read the news, you know that guy, right? But I am on the news. I find out that the markets are volatile or something is happening every time I get a phone call from one of the media channels asking me to go on TV. I'm like, oh, okay, so either Bitcoin is crashing or stocks are going up or something is happening. They want to add to the hype or FOMO, so they call me. So that is my source of knowing something is happening in the markets. Other than that, I have a $7 million portfolio. I don't watch the news. Doesn't serve me. So some people here in the chat are amazing. They're saying, I'm actually hopeful because of it. I don't feel affected by the recession, just want to buy a home and become MMA or CD to put my money in. So good. Amazing stuff. So how would it be okay? Would it be helpful for you guys if I shared with you 6 market facts that will help you create a strategy that you're confident about no matter what happens in 2023? Would it be okay if I shared with you this 6 market facts? We're not talking about what could happen. Okay, we're getting a lot of yeses. Let's go. So bring out your notes, bring out your note. Market fact number 1, and I'm going to share my screen in just a little bit here, is that on average, again, for those of you who are watching me not on Zoom, come on over, go to buildmorewealth.com. Just by signing up, like for free, you can come on Zoom. So come on Zoom so you can see my screen. On average, corrections have occurred once a year, every year since 1900. It's like having a birthday. What is a correction? When the markets dip a little bit. And what happens then? The media, what's happening? They have no choice but to create fear and hype about them because creating drama is their job. I mean, if I were them, I would do the same. Back in the day when I used to write blogs, like that's what I used to do. That's what we do because we want to get people hooked. It makes good TV. And on the average, now listen to this, hear this. Every correction, on average has lasted less than 2 months. So 2 months of amazing advertising money for TV because they can create all this hype and FOMO. Oh, China, this is happening in China, and this, and like that happened. And like they try to link all these random things to the correction, and the world is coming to an end, and everybody's hooked because fear is very, very motivating. Meanwhile, the average drop is only 14%, 14.2. And then it goes back up. And what does this fact tell you? This fact tells you that chances are that if you hold on tight, just like if you in winter, you hold on tight, guess what's gonna come? Spring. It is very likely that winter will pass because that's what the universe does. It moves in cycles. And that's what we do on Investivo. We actually study cycles so that we can dollar cost average smartly, but without being stuck to our screens all day and without watching the news, without any of that. How cool is that? Somebody say cool if you think that is super duper cool. Fact number 2. Around 20% of all corrections turn into a bear market. What is a bear market? A bear market is when the markets drop more than 20%. Oh my God. Bear, what? And before, back in the day when I didn't know what a bear market is, I'm like, what is a bear? Is it gonna come eat me? Like they give all these like fancy names to all their shenanigans to make you feel stupid. And like you don't know. And when you don't know, you get even more scared. Bull. I'm like, what, dude? Like, I literally had to go study. I'm like, bear, bull, like what? Wall Street, bro. Sometimes these bear markets signal a recession. Recession. I was thinking about it. My daughter was talking about recess. At school, again, this is a word that I learned. I didn't go to school in America, so I didn't know. Don't you guys go to recess to just like refresh and come back to class? Isn't that what recess is for? Doesn't recession come from the same word recess? Again, I may be completely making this up, but today I was like, isn't recession and recess like kind of the same thing? It's just a recess. It's just chilling, going to the bathroom, right? Going to the bathroom, having some water. Recess ended in high school. In the markets, it still happens every year. The market needs a recess, needs to refresh, needs to go to the bathroom. Like, give it a break. That's what a recession is. It's not scary. Chill out. You got to go back to school. You got to go back to your friends. Sometimes a recession or a bear market happens in the middle of a longer term bull market. So it's going up, 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 up. What is a bull market? Okay, for those of you who know, how many guys are new, have no idea what a bear and a bull is? So this is how I memorize which one is bear, which one is bull. Bull, you see, it's B-U-L-L, B-U-L-L, right? And it has the same 2 letters as buy. So how I memorize it is that a bull market is when everybody's buying. And by everybody, I mean the non-investivas and investivos. Everybody's buying, so the price is going up, 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 up. So the bull market is when the price is going up. Everybody's buying, B-U, B-U. Just remember that, all right? And then the bear market is the opposite of that. That is when the prices are going down. For whatever reason, they came up with these 2 animals. Nobody knows. They have some theories. It's BS. Anyways, so that's the bull market. And sometimes everybody's buying. This actually happened very recently, right? In fact, in COVID, that was interesting because the market was going up, and then COVID happened, boom, it went down. It actually went down more than 20%, and then it immediately went back up to what it was before. Now, bear markets, why would we have bear markets? So many different reasons. Bubble burst and economic bubbles burst, like we had the dot-com bubble, now we have the tech bubble, we have Bitcoin bubble, all these bubbles. So what is a bubble? Is that when the bear market is like going, everybody's buy, all these, it's bubbling up, the buying pressure. And then when there's nobody else to buy, it bursts. That is an economic bubble burst. So this is again interesting. I first learned this, I heard this word, economic bubble. I was in Japan, so I used to teach English when I was a student in Japan. I studied electrical engineering in Japan. And as a side hustle and to learn English, I used to teach English to Japanese people. No, now, like, it's weird, but like I would like go learn some English and then I would go practice it. I'm like, it worked. But anyway, so I had this student who was a university student, and I would like give them like a topic and allow them to talk so that they can practice their speaking. And that's the first time I ever heard the term economic bubble, because this kid was a finance student and he was trying to tell me his thesis in finance. And he's like, economic bubble. And I'm like, what? Bubble? Like a gum? Anyways, that's the first time I heard it. I didn't know what it meant for a very long time until I went to Wall Street, and it finally all made sense. Now, other reasons we could have a bear market: high inflation. Hello, we have it right now. Political unrest. Kind of hello. Pandemics, random causes, wars. All these things could cause a bear market. Now, how many of you thought that the pandemic is never going to go away? But guess what? It did. How many of you agree that everything shall pass, and so shall bear markets? It's nothing to worry about. In fact, our investdivas and divos, they welcome the bear market. Now, how many of you guys are ready for market fact number 3? Somebody put a 3 in the comments if you're ready for market fact number 3. 3. So good. All right, so market fact number 3 is that nobody, and I mean nobody can predict consistently whether the markets will go up, down, sideways, whatever. Short term, that's a key word. Long term, we'll have some receipts in just a little bit, but short term, nobody can. We can just guess. And it's funny because, you know what they say, a broken clock is right twice a day or whatever, something like that. One of my friends, he's this Persian dude who pretends to be Italian, Dr. Doom. Nouriel Rabini. So Nouriel Rabini, he's Persian, Jewish. We were in Great Neck. I got introduced to him because I was in finance. And he's famous on Wall Street because he's Dr. Doomsday. So he's always gloomy about the markets. And he happened to be gloomy about the 2008 market crash as well, before it happened. So it's always gloomy. And then one time, his prediction came true, and we actually hit a recession in 2008. And ever since then, he's become super famous. And he's still gloomy. And he continued to be gloomy. And then guess what? 2020 crash happened. They're like, oh, he's right. Or he's been always saying a recession coming. And oh, really? That's a fact. Recessions come every 5 to 8 years, dude. Like, you're not a genius, but he makes good TV. And the headlines, oh my God, the headlines. Market correction ahead. Recession could wipe out your wealth. How many of you have seen that headline on Instagram? Every 2 out of 5 posts that I see on Instagram. Protect your wealth during the recession. Winter is warning, big sell-off ahead. Right? Like, dude, chill out. How many of you want to look at the actual charts right now with me? Again, if you're on TikTok and Instagram, come on over to Zoom, go to buildmorewealth.com and come on over to Zoom so you can see my screen. How many of you would like to actually see what happens during a real recession? Me, you love the memes. All right, so let me share my screen. Fingers crossed, my screen share is gonna work. Oh, yes, it did. Hallelujah. All right, participants can see that. Preparing live stream. Can everybody see my screen? Somebody say, yes, I can go ahead. Can you see my screen? Yeah, yes, I can. Awesome. Thank you so much, Tara. So this is the daily chart. I'm looking at the S&P 500. Now, if you don't know what an S&P 500 is, basically a basket of a bunch of stocks. All right. And it tracks the whole market. Not the whole market, a part of more important parts of the market. All right. And so this is a little bit complicated. Let's delete a bunch of things because I have added some things that help me when I look at a chart. It kind of looks naked. So we're going to turn the candles into a line. So now how many of you can see this black line? This black line is basically the price of the market, kind of as a whole. And this is the timeline. So when you zoom back, like years ago, years and years and years, let's zoom way back. What is happening? This is 1872. What? 1870 freaking 2. The market was going up, 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 up. And based on what I just taught you, what would this peak that kind of looks like a mountain be? First of all, this is a bull market, right? Everybody's buying. The price is going up, 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 up. And then it looks like that it came crashing down. This is exactly what we mean by a bubble. So there was a bubble. Everybody was buying. S&P 500 was $6. It went up all the way to $30. Oh my goodness. Everybody freaked out as it dropped 84% in 1931. And I guess there was some kind of a war then. And then what happened? It went up and down, up and down. People were panicking. And then in 1944, this is called a bottom out. Can everybody see this valley? Somebody say V, put a V in the comments if you can see this valley. Put a V in the comments so you can see the valley. Yep. And then this valley, we call this a psychological level now, or a support level. It supported the price and prevented it from going lower. And heck, another bull market started going up, up, up. Now this time it went all the way to 36. This is an all-time high. I bet if media existed back then, they would be using their charming accent and saying the markets have been hitting all-time high. Da, 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 da. And then it went even higher, 47, 50. And then 56. Oh, a little bit of a bear market here. I bet everybody on the radio was panicking. It went from 50 down to 40. Bear market, sell off. Well, back then, I think it wasn't that pop. I'm just making it super dramatic, but that's what the media does. It was $48. How much is S&P 500 right now? Isn't this crazy pants? This is so crazy. Team on TikTok, I'm showing my screen on Zoom. So come on over to my Zoom. Link is in my bio. Link in bio, Instagram, TikTok, come on Zoom to see my screen. All right. So And then it went back up. Wow, there's so much drama here. Can you guys see, like, it's already very dramatic. It's 1957. I think my mom is just born, and it goes up to 72, and then boom, it goes down to 54, and then it goes back up to 90, 95, and then it goes down to 77. This is so dramatic. And then we had an actual recession here in 1975, almost the year my husband was born. He's gonna get mad. No, 1976 is when he was born. Anyways, and then this is the actual recession. And then what happened next? Started going up, went down, went up, went down, went up. Can you guys see? We get to 1999, another bubble forms. Then it drops 47%. Then it goes up again. Then it drops 53%. This is 2000, what? 2008, of course. And then it goes up again. And then welcome to the modern history. We have another string of bullish market. Then COVID hits, it drops. And then what happens? I'm sorry, this was COVID, went back up again, and then it dropped. And guess what, team? Guess what? Right now, this is where we are. We are here. This was beginning of 2022. This was January 2020. Can everybody see this peak? Somebody put a P in the comments if you can see this peak in January of 2022. And then this is all of last year, and we are currently here. Okay. Now, the interesting thing is, this August, when the markets were like really low, let's measure how much it dropped, because we talked about that a bear market typically is what, 20% on average. And then if it goes below it, what happens? What do we call it? If it goes below 20%, what do we call it? We call it a recession. Below 20% is a recession. Actually, no, it's a bear market, sorry. And it only dropped 24% in so far, okay? Back in 2008, it dropped 53%. And there are some correlations, but not much, because it really bottomed out completely here in 2009. And then the way was up. But this time is a little bit different because it's kind of teasing us. It's giving the media a lot of material. It went down. We call this a key psychological level. Don't worry about all of these Fibonacci stuff over here. I teach all about that in the Make Your Money Work For You Power course. This, again, these are just some tools that I use to make smart decisions. I'm not trying to time the market, but this helps me read history better so that I don't have to be stuck to my screen all day. Like these tools that you see on my chart, again, you can either just dollar cost average, and that's fine, but we dollar cost average smartly. That is how we do it. We just use these tools, and it allows us to we don't just invest beginning of the month. We invest on key psychological levels, and that just, brings up our average return a few percent higher. I'm going to show you the chart in just a little bit, how it differs if you perfectly time the market, or if you dollar cost average, or if you don't invest at all. We're going to talk about that in just a little bit. But this is where we are right now. And the market actually, so from a technical analysis point of view, for those of you who may be already in our Make Your Money Work For You Power course, this is actually a bullish reversal chart pattern, and this is called a neckline. So the price that the S&P 500 is right now, today at 4,081, is the neckline for this chart pattern we call a reverse head and shoulder. And that is a bullish reversal indication. It's just an indication. Again, there is no guarantee, but it's higher chance the market is actually going to go up and we're going to come out of the recession. Now, all of these people who know what they're talking about are saying that, no, we're going to see another boom and then it's going to go up. Again, I don't know. They don't know. They're just guessing. I'm just guessing. So what do I do? What do I do? So let me ask you a question. Compared to the all-time highs of S&P 500, is the current price. So all-time high is $4,800. Current price is $4,000. Which price is cheaper, the current price or the all-time high price from last January? Put a C if you think the current price is cheaper. Put a J if you think last January, or put an L if you think the last January price is cheaper. Okay, I'm glad you guys are listening. Everybody's putting a C. Amazing. So if you have never invested before, do you think, and based on what you just saw, do you think that this may not, I mean, it may not be the cheapest price, like sure, it could go down all the way to $3,000, but compared to the all-time high levels, and knowing that over time, this chart has only gone up, do you think that this may not be a bad place to just get started, to get your feet wet? How many of you guys are okay with getting your feet wet at the current market price today? And I'm saying getting your feet wet because I have a point. We're going to get into risk management in just a little bit. And I'm going to tell you my exact strategy that literally allows me to manage my $7 million portfolio once a month. And how many of you guys want to see one of my portfolios? I have multiple portfolios. I don't have all of my eggs in one basket. Let me see if I'm still logged in. Heck yes. All right. We're going to log into TD Ameritrade. I have to stop share because I don't want you guys to see my password. Security first. Not that I don't trust you. I love you guys, but still, we have to be careful. I'm going to share my screen again now that we are back into TD Ameritrade. Again, for those of you who are here on TikTok and Instagram just tuning in, come on over to Zoom. Link in bio. It's free. Come. All right. So I'm going to share my screen. This is my TD Ameritrade portfolio alone. I have 4 more portfolios. This does not include cryptocurrency. This does not include my retirement account. This is just one of my portfolios, and this is actually the highest it's been. 4,100,000 and something is my balance. Today, this 1% of the market went up is equal $45,000. Now, I didn't take a profit today, so this doesn't mean anything. This is just the normal market ups and downs. If I was showing you this exact portfolio last month, it was at about 3,500,000. So it was almost $1 million lower. And as you can see here in the chart, you know, last month, or maybe like in August even, actually here I bought a bunch, and that's why suddenly it went up by a ton, because I bought my buy limit orders. Oh my gosh. So let me tell you this. Why is our system so cool? August, how many guys have been following me for a while? I know that in August, we basically went to Hawaii for a month and a half, or almost 2 months. And I was just chilling by the beach. And I was like doing nothing, just going live once a day on Instagram and like doing nothing. We went to Hawaii. It's August, September. We're like just out testing out Hawaii, doing nothing. I already had set my buy limit orders, which means I had told Mr. TD Ameritrade, hey, when the markets and my favorite stocks reach this level, buy. And then they do it. It's automated. And I had said not just for S&P 500, but I had set multiple buy limit orders for my favorite assets as well. And all of them, a lot of them went through in August. And I have actually kind of stopped contributing to my portfolio because we're buying a house. So I wanted to have cash handy. But because I bought a bunch at this price, it is now up. Now, here's another scenario. Like, okay, this is great. Congratulations, Kiana. Good for you. But what if the people who know are right and the market drops again? What's going to happen then? Oh my gosh, you're going to go back to $2 million. Am I going to care? How many of you guys think I'm going to care? Somebody say no care if you don't think I'm not going to care. Who cares? In fact, I'm going to be happy because I'm going to have once we finalize our house, Right now, I'm not buying. I don't have any buy limit orders right now currently because I'm just like trying to figure some cash, move some cash around for our dream house. But once that's done, and I'm hoping this recession is going to come like in summer after we move into our new house, and then I'm going to set some brand new buy limit orders. And if it goes through, it's going to be so good. And if it doesn't, again, who cares? I already bought a bunch and it's going to go up. So it's very interesting because like, I remember around here when the market was going really, really high, people are like, oh my gosh, the market's at all-time high. If I buy now, like nobody should buy right now, which was kind of right. But again, who knew? Like I actually thought it's going to go to 5,000 before it drops. It didn't. It started dropping at 4,800. So I was wrong. But again, who cares? Right? And with our system, the way that I do it, I don't put all my eggs in one basket. I set multiple buy limit orders. Somebody say multiple buy limit orders just to cover my ass. So that if this buy limit order doesn't go through, at least this one does. Right? So that is how I mitigate risk. And then when I sell also, I do the same. So these were my sell limit orders. And again, I never go all in, all out. So I buy partially here, partially here, partially here, let's say. I haven't sold yet. I should have sold probably last year, but I was kind of in this mindset that, oh, I don't want to pay taxes. It's a strategy, but now my strategy has changed actually because we have a trust system. So anyways, my goal is to start selling partially at these levels, but I'm not going to sell it all because I always want to have skin in the game. So let's say if I buy 100 shares here and another 100 shares here and another 100 shares here, I may consider, again, you can decide your strategy by yourself. I'm going to teach you how to do it because this is my strategy. This is based on my risk tolerance. My risk tolerance is not your risk tolerance. And risk tolerance has 3 components. We're going to get into in just a little bit. But my strategy that I always stick to, because the strategy is there so that you don't act based on emotions. Emotions are the killer of your portfolio. Emotions are what? The killer of your portfolio. So let's say I bought 100 here, 100 here, 100 here. I might decide to then sell 50 here, 50 here, 50 here. I still have 150 working for me here. I've taken profit. The markets typically, when they hit key psychological levels, drop a little bit again, and then I would go back in. There is risk in it, but because I don't go all in or all out, I'm mitigating my risk. Are you guys getting it? How many guys are getting it? So I'm getting it. Let me say I'm getting it. Awesome. So that is the markets in a nutshell. And let's celebrate my portfolio again. This looks, I mean, I'm not gonna lie, when it's all green, it looks delicious. It's very delicious. I love it. But I'm also very happy when it goes down because then I have all this whole list. Right now I don't because I've wiped it out. So I you know, as I said, for the house reasons, but typically I have all these buy limit orders here. And then I'm just always like, oh, this buy limit order went through. So all right, let's do a little bit of Q&A here. I'm seeing some questions coming through. R. Ohana wants to know the answer to Erica's question. Let's go find Erica's question. There's a lot of chats here. So when you Erica's question, I don't know what Erica's question is. You can say it again. As I'm waiting for your question, let me go to the next market fact. The next market fact is that, well, we actually already covered that. The markets rise over time. And the fact is that there's actually this really cool chart. Actually, let me go back to let me show you this chart. Let me go back to presenting because this is super cool. Has Erica asked her question again yet? Okay. So look at this. With all of these bear markets, the greens are the bull market, bull years, when they finish the year in green from 1872 to 2018. The reds are the years that they finish the year in red. There are some spikes, but it kind of guys can see that the greens are way more. The greens are way more. And this one is really interesting because this is the global stock market from 1995 to 2019. And again, this is the average return. As you can see, the percentage return in the positive side is way more than the negative ones. There is a handful of negative ones, and there's a whole lot of positive ones, and this isn't even counting the 2020. Actually, at the beginning of it, it surged really high, and then 2022 it surged even higher, and then we have now the dip, which is about 20%. Okay, so these were some cool facts that I want to get. Okay, Erica's question is, what do you mean when you say multiple portfolios? Is that referring to Vanguard, TD Ameritrade? Okay, so yes, that's exactly what I mean. So I have a personal, just normal brokerage account, which is my TD Ameritrade account. And then I have a Fidelity account where I have some Roth IRAs for myself, for my daughter, and I have a 401k from back in the day when I was employed, and some other things. And then I have a cryptocurrency portfolio, and then I have an interactive brokers portfolio. The only reason, so I used to have even also a Robinhood portfolio. I've consolidated that into TD Ameritrade. Interactive broker is my oldest portfolio, but I want to kind of keep it as is because it kind of symbolizes when I started investing, and I'm not doing anything to that one. I'm not buying, I'm not selling, I'm just letting whatever that I bought. I think the last time I bought in that portfolio was 2018, and I'm just letting it run just as a symbol. So that one is just running on its own. Multiple portfolios, kind of risk management, just in case this one goes down, I have something else go to. And then the crypto portfolio is just because it's a crypto portfolio. I cannot purchase crypto on TD Ameritrade or on Fidelity. So that is a separate portfolio, and 25% of my overall portfolio is in crypto. Again, that is based on my understanding of cryptocurrency, my risk tolerance. That may not be suitable for you. Now that we covered this, oh my gosh, we're already an hour in, and I really wanted to get into risk management, but I really also want to finish this segment and tell you market fact number 6. Market fact number 6 says that the market return on average is 8.2% per year. If you miss out on the top 10 trading days during 20 years, your returns will drop only 4.5%. If you miss out on top 20 trading days, your returns will drop to 2.1%. If you miss out on top 30 trading days, your return will be 0. But if you get in at the exact wrong time, each and every time, get this, you will still be ahead of the one who left her money in the bank, because inflation is going to ruin your money. And I'm going to show you this chart now. This was my favorite. Now, again, this is a chart from REAP 2016, 2013. And again, there are so many different strategies, but just to show you the power of investment. If you stay in cash between 1993 and 2012, you would have had $51,000. Bad timing wrong each and every time, you would have ended up with $72,000. If you did dollar cost averaging, like the normal dollar cost averaging, $79,000. Invest immediately, 81, perfect timing, 87. So this obviously doesn't have the invest dividend analysis. Invest dividend analysis comes somewhere around here because we basically, nobody can time the market. This is just a hypothetical. What we do is that we dollar cost average, but we do it smartly based on key psychological levels, which also allows us to eliminate emotions from investments. And that is what we call the invest dividend analysis. We will get into that on Wednesday. And tomorrow, I'm going to teach you how to create strategies based on your risk tolerance. Because guess what? You are different than me. Did you know that? Did you know that we are not the same people, that we are not in the same situation? We don't have the same personality. We're not in the same location. We're not in the same state. We don't have the same husband, hopefully, right? We're not in the same exact financial situation. We don't have the same parents. We don't have the same independence. So for that reason, we may have different risk tolerances. And for that reason, we may have to create different strategies. So the strategy that I just showed you, I call it the 50-50 method, which is I go 50% in 3 buy limit orders, and then I sell 50%, 50%, 50. My risk tolerance, so there are 3, so I'm going to just touch on this today, and then we're going to get deeper into that tomorrow, because I'm actually going to get into the nitty-gritty on how to calculate your risk tolerance. But just to give you an idea, your risk tolerance has 3 components. How many components? 3 components. All right. The first one is your personal emotional risk tolerance, and that is all to do with your personality. If you're a risk-taking person, if you like adventure and risk and like all these things, then your personal risk tolerance, your emotional risk tolerance may be high. Whereas somebody like me, so my personal risk tolerance, my willingness to take a risk, we call it the willingness to take a risk, mine is medium. I'm not too low risk, but I also am not super aggressive. Personally, this is my personality. Like, I always think I'm going to go jump off the cliff, and then I get to the top of the cliff and then I back out. Like, I just don't have that kind of gut. All right. The second component of risk tolerance is your ability to take a risk, That has nothing to do with your willingness to take a risk, even though most people confuse the two. But your ability to take a risk has everything to do with your financial situation. How much money you are making, how much cash flow you have. We're going to get into that nitty-gritty, calculate your cash flow ability tomorrow, your cash flow situation, your net worth. All of these things combined together are going to tell you a number. You're either going to have high ability to take a risk, medium ability to take a risk, low ability to take a risk, or somewhere in between. And mine right now at this stage of my life, my ability to take a risk is higher, although because we're buying a house right now, my ability to take a risk has actually gone lower because we're trying to get, we're pre-approved, but we want to close the house. So my ability to take a risk right now is low, and that's why I don't have any buy limit orders. We literally just decided to buy this house 4 weeks ago. We moved on it fast. 2 months ago, I had no idea we were going to buy a house. So I had all these buy limit orders, right? Don't jinx it. We're doing inspections this week. If it doesn't go well, I'm going to blame you. All right, we're good. We have abundance. If it doesn't work out, another one. But regardless of that, ability to take a risk, again, depends on your financial situation. If you just got fired, your ability to take a risk probably goes lower. That doesn't mean your willingness to take a risk has gone higher or lower, right? So, and then there's a third component to risk, right? The third component to risk is your confidence in the asset you are investing in. Your what? Your confidence. And how do you gain confidence? Listen to the media? No. Actually learning about that asset. In the investigative analysis, we call that fundamental analysis. Fundamental analysis. Okay? And the third, if that's what you're lacking, you're in luck, because you can go and learn. How cool is that? And I teach you exactly to do the research and eliminate the noise, because the noise is not research. Research is research. Twitter is not research. Elon Musk is not research. This dude, whatever his name is, he's a cool dude, but what's his name on CNBC? That dude is not research. Somebody tell me his name. What's his dude's name on CNBC? The guy who's Jim Cramer. Thank you. He's not research. I mean, he does his research, but he also has a job, and his actual job is to create drama. If he's not going, nobody's gonna tune in. I'm doing that right now too a little bit, but I'm not doing that about the markets. I'm doing that. I'm edutaining you. Edutainment. That's what it's called. All right. So those are the three components of your risk tolerance. We're going to get into 23 components. It's just 3. Do the opposite of what he says. I don't know. I haven't actually listened to him in a very long time. But I mean, like that, he's got a job, and I'm sure, like, you know, they get some research somewhere, but it's kind of combined with the noise. And, you know, there are ways to do the research without getting influenced by the noise, right? So the 6 facts you want, okay, I can, yes, absolutely. So somebody's asking, who is this? Rosangela is asking me to recap the 6 facts that we just shared. Absolutely. So fact number 1 was that, fact number 1 is that on average, corrections happen every year, once a year, since 1900. That's fact number 1. Fact number 2, only around 20% of all corrections turn into a bear market. And a bear market is when the markets drop more than 20%. So this cycle in 2022, the market dropped 24%. So we were in a bear market. Sometimes these corrections, these drops, signal a recession. Okay. Fact number 3, nobody can predict consistently whether the market will go up and down in short term. Nobody can do. All right. That was fact number 3. Fact number 4 was that the markets rise over time, even though there are so many short-term setbacks. The markets rise over time. Fact number 5, historically, bear markets have happened every 3 to 5 years. The reason why that stretch from 2011 to 2020 was like the longest bull market ever was because it didn't fall into this 3 to 5 year thing. And then we had a pandemic, and then now we finally had the correction that everybody had been waiting for. And it could turn into a recession, but we know, again, fact number 3 was what? The markets in long term always go where? Go up, right? And market fact number 6, the conclusion of that was that the greatest danger of the market is actually being out of the market. That is when your money basically doesn't grow at all. No matter how bad you invest, as long as you don't day trade, and again, there are day traders, that is a completely different thing. That's not what we're talking about. right now, here, how many guys understand that I am not talking about day trading? I'm not talking about options. I'm not talking about gambling. You guys, how many guys understand? Wave at me. I don't know, put your hands up or do something. We are not talking about that. So we're only talking about long-term value investing smartly. That is what we're talking about. Erica says, I had no idea tonight would be so informational. I took the party a little too literally. Now I'm even madder. My daughter would not fall asleep last night. Oh, it's all right. It's all good. And this is just a pregame, team. This is just a pregame. Our Build More Wealth. I'm just warming you up for the actual event. The meat. The meat is coming next week. Build More Wealth Live starts next week on Monday. If you like this information, just imagine next week what I'm going to bring on the table, because this is just an appetizer. I'm just warming you up, team. This is an appetizer. Next week is going to be fire, especially if you're a VIP team. I don't say this lightly. VIP is where it's at, because I'm going to see your face. You're going to unmute yourself. You're going to ask your questions. We're going to interact. I'm going to give you nuggets of wisdom, and it's going to be fire. And the cool thing about VIP is that, you know how like even today, like Erica asked a question and everybody was like benefiting from that. That is what the VIP is, because somebody's going to ask a question that you didn't even think of asking, and it's going to help you. So if you're coming, come VIP. It's live. Understand that it's going to 4 to 5. VIP does not have recording. But you know what? If it's important to you, I am sure that you're going to find a way to attend so that you can build more wealth, so that you can create abundance for your children, for your life, for others, for yourself. Fill up your own cup. Fill up your own cup. That's what it's all about. And team, we have some questions. Let me do quick. Lisa is VIP already. Susanna said, I don't know if I'm VIP, I will check. Yes, go check it. Our support team is amazing. The $10 tickets, they were general admission. For beginners, what broker account should I open? TD Ameritrade, Fidelity, even Robinhood. If you have less than $250,000, they insure that amount, as long as, again, you don't day trade, you don't fall for their internal type of FOMO. Even Robinhood is fine, and it's actually very, very beginner friendly. TD Ameritrade, there is a learning curve. Now I love it. All of them are fine. Will it be on Zoom again? So VIP is going to be a meeting. It's not going to be a webinar like this where you're chatting. The VIP is going to be like, you know, your video is going to be on, and I'm going to see you, and you're going to talk. So Ameritrade works for Canadians. I believe in Canada, some of the good brokers are Wealth Simple, or Wealth Simple was for Australia. I have a list. I can share it with you guys tomorrow. Interactive Brokers works in Canada. Questrade, thank you so much, Tristan. And I'm enrolled in your course, where I be VIP. If it's a power course, so power course and the Build More Wealth Challenge are two different things. The power course is just about investing. Build More Wealth Challenge is about building more wealth. So it's going to be about a lot of information on building your own business and increasing your income and influence and building a wealth ecosystem. So it's very different than the power course. So if you're just a power course member, you're not going to be automatically enrolled in the VIP. It's a different service that we offer. I need to stop paying a money manager. Yes, you do. In fact, in the power course, we celebrate our students when they finally fire their money manager. Oh my gosh, okay, I have to tell you this story, team. This is the last story I'm going to tell. So I'm basically going to stroke my ego a little bit. All right. So, you know, we're buying a house, and my husband is like talking with the banks and like pre-approval, and they kept, you know, trying to push him that, okay, and we have this financial advisor and that financial advisor. And like they were trying to push him on a financial advisor. And my husband kept telling him, no, I guess my wife is good with it. Like, no, thank you. And then, so he showed me the email yesterday. So apparently this woman, I don't know, I guess her name is Monica or whatever. She, after a day, like before pre-approval, they're not allowed to search your name apparently on internet, but we got pre-approved. And then she wrote an email to my husband saying, oh my gosh, I truly apologize. I did not know that your wife is the Kiana Danielle. I'm like, what? And so apparently I'm a big deal. All right. So that was fun. I didn't know, like, I don't take myself seriously, but to hear that, like, I'm like, that's happening. So team, you guys showed up. You guys stayed with me for an hour and something. You guys are rock stars. You guys are action takers. Like literally pat yourselves in the shoulder and give yourselves a round of applause. I know I can't see you, but do it because this is a win. You guys showed up. You guys took notes. You guys participated. I am proud of you. You should be proud of yourself. Your family should be proud of yourself. And we have more to come. So again, if you haven't done it already, go to buildmorewealth.com, grab your VIP tickets, and tomorrow we'll still continuing with the pregame. This is still the pregame team. I love you guys so much. I don't want to leave you, but I also have to go to bed. So I'll see you guys tomorrow, 8:30. Ciao.